Is MicroStrategy the Labubu of software companies? A fun gamble for teenagers with daddy's Venmo account before they cry as it crashes faster than an OnlyFans influencer's career on a Boeing jet with loose doors? Or is it the secret cheat code for people just realizing Bitcoin might really mean you'll only keep a little bit of your investment? But first, for the normies in the audience, hi, how's the day job? What even is MicroStrategy? Once upon a time, it was just another boring software firm. Then it discovered a magic trick. Raise money, buy Bitcoin, repeat. It's like that roommate who thinks he'll be a billionaire but funds it all with Deliveroo shifts and ramen packets. Here's the playbook. Sell bonds called convertible notes, also known as IOUs you can trade for shares later. Then, hype up investors and sell more stock. More hype, more cash, gravy on gravy. Feels like a perpetual motion machine, right? Imagine if you could start selling your nephew's Roblox village on Zillow for real money, because somebody believed he might actually buy some bricks and build it in the real world. Sounds kinda dumb? Lots of people got rich from dumb ideas, and they stay rich if they get out before people smarten up. Except here are 5 reasons why the engine might stall. Scenario 1. Bitcoin crashes. MicroStrategy stock trades at a premium. People pay more for its shares than its actual Bitcoin is worth. It's like paying $10 for a $5 bill because you think it'll magically turn into $100. Bitcoin has always been inherently unstable, like your ex-girlfriend. MicroStrategy actual strategy is to effectively marry her and wed your fortunes to her mood swings with no effective escape strategy. Because virtual money is magic that disappears fast. In 2021, Bitcoin fell from $69,000 to $16,000, a 77% nosedive. Imagine how much MicroStrategy will go even further. If Bitcoin sneezes, MicroStrategy catches pneumonia and there is no divorce escape. Scenario 2. Convertible notes don't convert. Convertible notes only turn into shares if MSTR rockets past a target, like $600. If not, investors say, forget shares, give me cash. And as you'll see, the faster you run out of cash, the faster you start offering useless IOUs instead. Here's the problem. MicroStrategy doesn't have the cash. To pay up, it must borrow more or sell stock cheap. History look back. Back in the 2000s dot-com bubble, startups with zero profit were raising cash like it was monopoly money. They sold convertible notes, fancy IOUs that might turn into stock if the company took off. But most of these companies had no revenue, no customers, just a .com at the end of their name. So when their stock never hit the magic target, investors said, forget shares, pay me in cash. Problem. These companies had no cash. To pay up, they borrowed more or printed new stock at dirt cheap prices. Confidence tanked, stocks crashed, notes didn't convert, and the bills came due all at once. End result? Game over. The only thing scaling was the unemployment line and Pets.com's sock puppet. Scenario 3. Capital markets shut the door. This whole genius model depends on investors handing over real money, the kind with dead presidents, not cartoon apes. If that stream dries up, game over. Think 2008. Lehman Brothers borrowed mountains against mortgages people couldn't really afford. Once housing cracked, their loans came due, fresh cash dried up, and boom, instant collapse. MicroStrategy? Same trap, just shinier packaging. They've issued convertible notes and taken on billions in loans to hoard Bitcoin. At least Lehman's bad bets had houses behind them. MicroStrategy's collateral is an asset that can swing 20% in a week. If Bitcoin dips and lenders stop rolling their debt, the company's left holding promises with no money to pay. Game over. Scenario 4. Trust vanishes. MicroStrategy's first rule, always buy Bitcoin. Second rule, never sell Bitcoin. Break that and trust evaporates faster than a TikTok trend. We've seen this movie before. Terra/Luna in 2022 promised a confident, super secure digital currency. The second people started selling, the peg unraveled, and the whole house of cards collapsed in days. Billions gone. MicroStrategy's risk is similar. Their empire only stands as long as faith holds. Faith that Bitcoin keeps rising and that they never sell. But if they're forced to unload coins just to cover loans, same story. The foundation cracks, the market smells blood, and suddenly the collapse isn't a theory, it's happening. Scenario 5. Regulators bring the hammer. Again. MicroStrategy is a one-trick pony, and ponies go lame. We've gotten used to thinking the internet is a Wild West frontier with no sheriff. But regulators are waking up. The SEC has now allowed spot Bitcoin ETFs, clarified that Bitcoin is not a security in many cases, and is working on stricter rules for debts, disclosures, and crypto leverage. What happens when oversight hits hard? In 2017, China banned crypto exchanges, and Bitcoin dropped 40% in weeks. In 2021, new crackdowns kicked off another 50% drop. The US won't ban things like Taylor Swift, but it could start regulating Bitcoin harder or taxing it aggressively. Microstrategy's infinite money glitch strategy depends on value rising, borrowing cheaply, and never needing to sell. But what if they must sell to cover loans? Or a new law forces higher collateral or tighter reporting? Suddenly the strategy isn't brilliant, it's brittle. So, is MicroStrategy going bust? Not today. Bitcoin's up, new accounting rules help its books, and investors still dream of getting rich without trying. But history says leverage, trust, and hype never last. MicroStrategy isn't married to Bitcoin. It's in a prenup demanding Bitcoin always stay happy and optimistic. It's less a strategy and more like finding a hole in the bank wall. Sure, you can grab cash while it lasts, but glitches always mean something's not working.